Hello, I'm Robin Da Vinci, and I've been in the field of money for more than 40 years. And I've worked with multi-million-dollar companies and people of high net worth personally, and have worked to help them reach their goals, create budgets, research expenditures, and follow them through to great success. It's been a wonderful 40 years plus of experience. And so today I want to use that experience of all that time and of also being an individual that wakes up every day and needs to understand the truth about money as everybody else does. I want to dig a little deeper. I have a job that I do, a volunteer job that I do at a local high school. And I have seniors that I talk to about money. And a lot of times I have seniors that are with their eyes wide open, with their mouth wide open going, is that the truth? And I said, I always tell the truth. And I'm telling you the truth. And I'm going to tell you the truth. And you're going to say, ouch, I didn't know that. And I'm going to say back to you, and now you can't say you didn't know. The most important thing to me is that you know and understand. So today I'm going to talk about where your money is and what money really is about. I have to explain that when we printed money back in the old days, we actually had an asset to back it up, right? So we print money, we have gold in a vault, and in that vault is enough gold to back up the money that we're printing. We don't do that anymore. We're printing money and it's out there and there's nothing to back it up. So when you see at a bank where it says, I have 14 billion in assets, that's a rule for the banks. They have to have enough assets to cover all of your money that's floating around. But you don't think they actually have money in that bank, do you? If you have depositors of, let's say, at a branch, and they go in and these particular 3,000 depositors use that bank and there might be 3 billion in there, there's no physical money there. The physical money is just being transferred around through the internet, wires. It's all, I want to say, on paper, but it's not really valuable. That's why everybody gets scared. That's why banks go under. So let me give you an example. You have a bank and people hear grumblings that that bank isn't solvent, which means they don't have enough assets to back up what their depositors think they've put in their bank. So you've got 150,000 at a bank and it's FDIC insured to 250,000, and you're going, oh, I hear that bank's in trouble. I'm going to go get my $150,000 out. And you get in line with a bunch of people and they all want all of their money out. That cannot happen because all that money is not there. People still line up at banks thinking that the banks have cash and have that money right sitting there for you to go get whenever you want. No, that's not how it works. They have to have assets, buildings, commercial structures, investments. If they invested in something that tanked, that could tank their assets that cover what you think are your deposits. You should never, ever have your money at a bank of more than $250,000 under one tax ID number. If you have $1 million at one bank under your social security number, only $250,000 of that $1 million is insured. FDIC is Federal Deposit Insurance Corporation. They are insuring your money up to $250,000. After that, that money is not insured. So if that bank goes down, you don't get your money even after a long wait because you're only insured to $250,000. I'd like to say, oh, you'll get all $1 million back, but I can't say that. You probably won't. And if you do, you're damn lucky. So if you have $1 million, and I know most in the audience don't have $1 million, but if you have more than $250,000 in one bank, you need to go to another bank and put the rest of it there under your tax ID number. Or you need to have entity that holds the money with a tax ID number, because each tax ID number, for tax ID number, I mean right now to individuals' social security number, is only insured to $250,000. So you want to know all the time the truth about money. Is my bank solvent? You can actually Google your bank and ask about their assets. You are allowed to go in and ask your bank if they are substantial, if they have the assets to back up their deposits. And you need to be judicious in the way you spend or save your money at a bank or at any of the internet banks. There's a lot of internet banks that don't have branches. The days of a bank branch are going away. Those banks are selling their assets off, and I'm not sure what's going to happen, but I see branches closing down all the time. Or you go into a branch and it's like crickets. There's nobody in there but you and two tellers. They're used to be the banks would bustle with people opening new accounts and meeting customers and sending wires and doing all that fun stuff banks used to do. That's not true anymore. And even though banks are cracking down on things because of so much fraud, they're not really investing in their bank branches. They're actually moving to all online, which opens another can of worms. So the truth about money is when you're online with your money, moving it around, if you had to get it all back, you'd kind of be in trouble. It doesn't work like that. You can't go into your bank, and not everybody who has money at a bank branch can go in and get it back out. It doesn't work that way. So remember that you need to know how substantial the bank is that you're banking with. You need to make sure that you're not over the limit of $250,000 on one of your tax ID numbers. And you have to understand that when we talk about deficit, a lot of times we're saying, simply we're spending more than we're bringing in, but we're also saying that our debt really isn't backed up. I'm going to tell you that there are many things that we have done wrong in this economy. The way that we bundle loans and sell them to other countries. We bundle up our mortgages, rate them as A+ when they're really C- packages, and we send them off to other countries and we say, okay, you're investing in our mortgages. We do a lot of things to create revenue, and we aren't always upfront about it. So the truth about money is it doesn't exist the way you think it does. And the money that you have is similar to your credit card. You're just putting a card and saying, okay, I'll pay you back. And then you take money and you pay it back. Where is that money? It's really, we're just moving numbers from one space to another. And if you had to liquidate, and they'll see, what are you liquid? What are your assets liquid? It would be harder to do so. If you only have 10,000, that wouldn't be hard to get. And having 10,000 is a real plus. I'm not putting that down, but it would be easier to liquidate $10,000 than it would be to liquidate 100,000, and certainly more than that. So you want to keep pace with what your banks are doing and what your investments are doing, because like the Ponzi schemes of the past, our treasury system and our money system is not that solid. So keep that in mind when you're talking with people about money. So thank you so much for listening, and like and subscribe, and please take advantage of my 40 years in the business, because I want to help.